Lyft reports more quarterly losses, and they've promised that, yes, price hikes are coming. Like, for the actual cars, not the bikes this time.
Xbox, Twitter, Uber,
Postmates,
Netflix, Movie Pass,
Google,
eBay,
DoorDash,
Apple, Amazon, Airbnb,
The Apptrepreneur. Hey everyone, this is Kevin the Apptrepreneur. And before we talk about today's topic, I need to take a moment to kind of be a little frank with you guys. This is not an easy thing to admit sometimes, but I figured I wanted you guys to know what's going on. I know I'm going to have some hate in the comments below because people will definitely seize upon this opportunity to be as cruel as they want, but that's fine. I don't care right now. If you notice I'm a little more depressed today, if you notice the next couple videos are missing a kick in my step, maybe there's not as many, maybe there's even a couple days that they don't go up. I have to be honest, I've been pretty upfront about the fact that I suffer from severe depression sometimes, and there's a lot of little things that can trigger it. And I might make a separate video on the vlog channel explaining what kind of set the events in motion over the last week to today, but the bottom line is right now I am hurting a lot. I actually sat in that bed for over an hour just telling myself, just get up and make a video. Get up and make a video. You know, you've got sponsors that, you know, you have to keep happy. You have people who are waiting for that daily video, and you can't just sit here all night. You can't just lie in bed staring at the ceiling. Get up and make a video. Just make the video. And I am. You know, at least I think I am. I don't know if this is actually going to go up, to be honest. But it's hurting a little bit right now, and I think it's going to be hurting for a few days. And I'm going to be taking precautions. I'm going to be like going to the doctor soon, seeing if, you know, maybe I need to have my medication changed up a little bit. The reason I'm telling you all this is because I'm one of those people who believes we shouldn't hide from mental illness. I believe we should. I mean, it's of course a personal thing, but I feel it's best to be open about it, to let people know when you're struggling. This is a struggle right now. Just talking and making this video is such a struggle right now. I don't know if this video is actually going to go up. But one of my ways that I kind of fight this is I just try to keep myself busy if I can. So I believe there's only going to be one video today, because I can't fathom doing a second one. But I wanted to let you know what's going on, and if I disappear for a few days, that's probably what it is. I'm going to try to stay focused. I'm going to try to keep you up to date with what's going on. But it's going to it's hard right now. So I wanted to be perfectly frank about that, just in case I felt a little weird the next few days. So I tell you what, let's have a word from our sponsor and get on with this video. Times are changing for gig workers and the gig economy, and there are a lot more gigs from a lot more companies than there used to be. That's why when people ask me where they can go to find resources for the gig economy, I recommend gigworker.com. At this site, you can see what other gig workers are doing and discover better opportunities from industries, companies, resources, and even a forum where you can talk with other people in the gig economy. Gigworker.com is a great resource site whether you work for Uber, Lyft, Postmates, DoorDash, TaxRabbit, Thumbtack, Upwork, whatever. There's a gig for you and there's a forum for you on gigworker.com. Gigworker.com for all your gigs. So for some reason, I decided to land on this particular article about Lyft's earnings report. For the record, Uber is releasing their earnings report later today. It's tomorrow for me. It's today for all of you folks out there. And God willing, I will talk about Uber's earnings report, or rather lack of earnings report, when that time comes. In the meantime, Lyft has announced theirs, and here's some key points. Lyft lost 68 cents per share adjusted on 867 million in revenues, beating analyst expectations for quarter second. The company says it's taking a big step towards profitability. Among other recent challenges, former COO John McNeil departing the company, and Lyft had to pull some of its electric bikes out of circulation after they caught fire for unknown reasons, which we've talked about. We've talked about everything except the 68 cents per share. Now, I want to kind of let you know what's going on with a headline like this, because you read a headline like this, and it sounds like Lyft is doing extremely well. Like, oh, you mean they're making money? Oh, you mean they're doing better? And that's actually really not the case. In fact, if you look at this article, shares in the company climbed as much as 13% after hours, but gave up early. Well, actually, that we're not going to look at that one right now. So, in a call with CNBC's Deirdre Boza, Lyft CFO Brian Roberts said he believed peak losses for the company were last year based on how well this quarter went. He also said the company may break even sooner than it predicted and will update the street later this year in terms of long-term guidance and break-even date. Lyft said it now expects revenues to reach between $3.47 billion and $3.5 billion this year, up from the previous stated range of $3.275 billion to $3.3 billion. Now, here's where this is important, and this is why Lyft is not necessarily doing as well as they'd probably like you to think they're doing. Because some of you at this point might be saying, like, well, but didn't they report like a $3.4 billion loss? I mean, that's not much of a climb. Yes, Lyft still lost money. In fact, I believe they still lost more than $3 billion. So what makes that a success? Well, here's what makes it a success to investors and to some of the people writing about this. What makes it a success is that Lyft last quarter reported losses but said that they were stabilizing and that losses would shrink and that they would be breaking even and getting a profit very, very soon. What today's earnings report says is that they are on their way to doing that. Now, you and I, who've been doing this for a while now, know that that is not necessarily true. In fact, it's not uncommon for losses to shrink a little after the summer because there's a lot of prime time, and with the new upfront pricing all around, and and Lyft continuing to take the prime time, aka the surge from the drivers, that there's always, like, in the middle of the year, that time where Uber and Lyft lose a little bit less money than they typically do. But we all know that it kind of just goes up and down like the stock market. They I think at the least, they will usually lose $2.8 billion. At the most, they'll lose about $4.4 billion. And it always hovers between there the whole time. But at the moment, they are making good at the promise to investors that, hey, we said that our losses were going to stabilize. They've not only stabilized, they've shrunk. We lost less money this quarter, and we're going to continue to lose less money until we are profitable. And based on that news, the stock market jumped around a little bit. Now, you might look at this and that was like, oh, that's crazy. That's like a little roller coaster. Now, what happened here? Well, this is when they announced that they had lost less money, because investors like to hear that. So they bought more stock than they thought. But I think it's very telling what happened here. Why did it dip so strongly almost immediately afterwards? Well, here's what happened. Lyft also announced that they were freeing up the locked up stocks. Now, what the locked up stocks is that all those engineers, some of the managers, some of the marketing department, people who built the company and were being paid partly in stock compensation. With the exception of the major players, everyone at Lyft was told you couldn't sell until a certain date, which I believe was in September or something like that. Well, actually, let's go back here, because this is what I kind of skipped over. The share lockups would expire on August 19th rather than a previously scheduled date in September. So that's what this is. And I think this shows exactly what investors truly feel. Yes, they got a little excited at the thought of less money, but when they heard that the that people at Lyft could sell their shares like a month earlier, it went way down because we've seen ample evidence of key figures selling Lyft stock. You have all these young tech entrepreneurs who joined the company like 5 years ago who've just been waiting to cash out on that stock. Well, guess what? They're probably going to sell, and it freaked the market out. And that's what happened here, I believe. I'm not a stock expert. I'm not a lawyer. This isn't financial advice. This is just me commenting on what I see and what I think it means. However, you also saw something other interesting. It started to climb again. Now, what on earth was that about? Well, I think it has something to do with this. Lyft says higher fares will help it shrink losses for the year. So here's the article. Lyft Incorporated signaled an easing in the price war with Uber Technologies Inc. on Wednesday when it issued improved forecasts for sales and losses. The move buoyed. I hope I'm sorry. I know what that word is. I'm like so struggling to get through this right now, folks. Both companies' stocks. Second quarter results for Lyft were also better than expected. While sales growth is slowing, it's doing so less rapidly than previously anticipated. Revenue in the second quarter reached $867.3 million, up 72% from the year before. Analysts had expected a 60% growth. But again, I want to point out the flaw in this number. This is another thing that made people confident because oh, hey, sales are up 72%. And yet the losses are still about $3.5 billion, well, $3.3 billion. So that's a 70% increase and yet like a 2% decrease in losses. So it's still not adding up. But anyway, the ride-hailing company projects at least $3.47 billion in sales for the year, compared with an average analyst estimates of $3.32 billion, according to data compiled by Bloomberg. Lyft also narrowed its forecast for adjusted losses, which excludes debt, interest, and other costs. Lyft said the loss for the year will be as much as $875 million, a $300 million decrease from an earlier projection. The revised forecast indicates that Lyft will lose less this year on an adjusted basis than 2018. Anyway, that's fine. And we'll go down a little bit. But Wall Street remains optimistic about the company's prospects despite persistent losses. Most analysts have buy ratings for the stocks. Lyft and Uber investors are betting they can upend the transportation industry and eventually find a path to profitability. Both companies recently began to raise fares around the U.S., which is a main battleground, accounting for almost all of Lyft's sales. Lyft's second quarter loss increased 12% to $197 million, but the price increases should help narrow losses. By the way, price increases also what helped narrow the losses for Disneyland when Star Wars Galaxy's Edge ended up being a surprising flop. For the third quarter, it projects a reduction of as much as 29% at $190 million to $210 million. Quote, the price adjustments that have been reported went into effect at the very end of June, so there was a limited impact in Q2, Roberts, the CFO, said in a phone interview. Investors will watch closely whether Lyft can continue to cut costs while maintaining revenue growth. Quote, we're trying to get a sense of that the unit economics and ride sharing are good and that we're not going to have to wait forever for some realization of profitability, said Tom White, an analyst of D.A. Davidson. So there you have it. This is why it also went up, because Lyft did indicate that they and also Uber's doing this too, that they are raising the rates. And of course, they're not giving the drivers any money. They're not giving the drivers any of that money. I didn't expect them to, of course, but, there you go. And so, Wall Street is going to be a little bit more patient with them. I mean, here's the thing. I think Uber and Lyft Wall Street will be patient for them for at least a couple of years, which means I guess I'm going to be doing this for a couple of years at the bare minimum. Because what they do see millions upon millions of dollars coming in. Yeah, there's losses, but they see money coming in. Eventually, it has to turn profitable. I mean, they're still waiting for Netflix to be profitable. I don't know if that's going to actually be the case. But hey, it eventually worked out for Amazon after 20 plus years, something like that. So that's why the Lyft stock was kind of up and down today. It went up when they found out that the losses had narrowed. It went down when it was revealed that the locked stocks would be unlocked, I think, in 13 days or something like that. And then it went back up a little bit when, Lyft clued them in that, prices were going to be going up. Rates are not going to be going up. which, never going to get used to saying that, I suppose, or never going to stop saying that, I guess. Rates will keep going up. You know, I'm just gonna tackle this on at the end because why the heck not? Disney goes after Netflix with a 13 a month streaming bundle. So for $13 a month, you're going to get Disney Plus, ESPN Plus, and Hulu. And two of those do carry commercials, but that's 3 streaming services for $13 a month, which is less for the subscription of one service. That's going to be a great deal for a lot of people. It's not going to be a great deal for me, though. First of all, I already have Hulu, and like the next year and a half is paid off because of a combination of the 99 cent a year, a 99 cent a month Black Friday sale, and a $50 gift card. So Hulu's paid off for me for a little while. I don't even have to think about that. I don't really watch ESPN, to be perfectly honest. I don't like sports. If they have some sports documentaries, maybe I'll hack into my brother's account once in a while. I saw that documentary Head Games recently that was on Pluto TV. That was a really good movie. Like, really good. Of course, it was from the guy who directed Hoop Dreams, which is one of my favorite documentaries. So, I'm just going to throw that one in there. That's a pretty good deal. It's going to be interesting to see the streaming wars play out and who's going to be willing to pay for what and what's going to cost what. I suspect almost all this stuff is going to have commercials at some point. Anyway, I'm going to wrap that up. Boy, I went longer than I thought I would, probably because I shared my life story a little bit. So folks, what do you think about all this? Do you think Lyft is in the clear? Do you think they're going to be in trouble still? Love to know. Comment below, like, favorite, share, subscribe, and yeah, we're just going to leave it there. Flame responsibly. Have a good one. I hope to see you tomorrow when we can talk Uber's earnings.